The Gulf conflict is forcing oil producers to prepare for a future beyond Hormuz. From the UAE and Saudi Arabia to Iraq, Gulf exporters are accelerating pipeline projects and building alternative export routes to keep crude flowing. Before we wrap it up on this edition of World Business Watch, here's a report on how the crisis is redrawing the world's oil map. Take a look.
For decades, the Strait of Hormuz has been the world's most critical oil choke point. But the prolonged disruption triggered by the Gulf conflict has forced oil exporters to confront a scenario many once considered unlikely. A world where Hormuz can no longer be relied upon. As the closure drags on, Gulf producers are scrambling to secure alternative routes. The UAE is accelerating plans for a pipeline to Fujairah on the Gulf of Oman, while Saudi Arabia is relying heavily on its east-west pipeline to move crude to the Red Sea. Iraq, one of the region's most exposed producers, is also exploring ways to rapidly expand pipeline capacity. The immediate goal is simple: keep oil flowing. But the longer-term consequence could be far more significant. Energy security is no longer just about how much oil a country can produce. It is increasingly about whether that oil can reach global markets through multiple reliable export routes. The crisis is triggering one of the biggest shifts in global oil logistics in decades. Gulf producers are now investing in what analysts describe as an export network with multiple exits, reducing dependence on any single maritime choke point. The urgency is particularly evident in Iraq. Production from its southern oil fields has reportedly fallen by nearly 70%. With most of its exports traditionally moving through Hormuz, Iraq has become one of the hardest-hit producers in the region. Meanwhile, the UAE continues its push to raise production capacity to 5 million barrels per day by 2027, while Saudi Arabia's spare capacity and alternative pipeline infrastructure have provided a degree of resilience. Analysts say increased export from Venezuela, Russia, and potentially Iran could eventually help offset supply disruptions and ease pressure on prices. Venezuela's production has already climbed to around 1.25 million barrels per day, with some forecasts suggesting output could reach 1.5 million barrels per day by year-end. The return of heavy crude from Venezuela could directly compete with similar grades exported by Iran and Russia, increasing supply in a key segment of the market. There's also growing speculation that prolonged energy inflation could eventually increase pressure for some form of sanctions relief on Iranian crude exports. Whether that happens remains uncertain. But one thing is becoming increasingly clear. Once the conflict ends, the global oil market may not return to its old structure. Business Bureau Report, WION World is One.